In a couple of weeks' time, some of the big mining companies report numbers, their production reports, but it comes in the context of what appears to be an escalating trade war. Some of the base metals have taken a tumble recently as well. How is all this going to impact on the mining sector? Well, John Meyer joins us now from SP Angel. Is it a particularly hostile environment for miners at the moment?
I don't think so, and I think that these falls in copper and zinc and other commodities are partly driven or largely driven by hedge funds shorting the commodities down. For me, yes, there is a bit more mine supply around than was anticipated. We saw this in numbers from the International Copper Study Group, who reported yesterday that there was 6% more supply in the first half than a year ago, and that's okay. That's fair enough. The mine response has been quite good. It's been in response to higher commodity prices, particularly for copper, particularly for zinc, which have done very well. So it's brought these prices straight back down to where we were a year ago. But I don't think this is going to upset the mining companies particularly. I think there's a lot more to come from these companies in terms of earnings growth.
So you're still a bull. I mean, we've spoken before about copper, for example. I know you've got a number of clients in the copper space. Are you still a bull on copper in the longer term, or do you think there's still more downside to come?
Well, some of this is driven by the strong US dollar and the strength of what's going on in their economy. And of course, a stronger dollar is always a weaker commodity price in just about anything you look at. But what that means is your dollar earnings are strong compared to local currency. So if you're buying a stock like Rio Tinto or BHP, their earnings in sterling are going to look very much stronger, despite the fact that the copper price is slightly less.
Yeah. Also said at the top about the escalating trade war. I think it's fair to say it's escalating. I mean, we hear it almost every day about some contemplation about other tariffs being put onto various things. It all started, of course, in steel and aluminium, but it seems to have broadened out. How does this impact on, well, the base metals, the metals themselves, and indeed the mining companies?
Well, I think that the trade war is part of a very clever strategy by the Americans. Forget Trump and his horrible rhetoric. This is something that is driven by smart people behind Trump who've got an agenda. They're saying, we've had low tariffs in the States for a long time. The rest of the world hasn't played fair. And it's not just China, it's the European Union that have had terrible tariffs against the Americans. And that's just beginning to come out because nobody was talking about it before. But they're starting to correct the imbalances, and they're saying, well, okay, if you guys are going to have these high tariffs, we're just going to raise our own and try and equalize the situation. And the Chinese, interestingly, are responding by allowing their currency to fall, which of course helps to offset the problems there. And also there's effectively a bit more QE in China. They're improving liquidity within the banking sector, and that will help local Chinese businesses to weather the storm whilst they start to find new markets to sell some of their products into until they become more competitive again. And this is something they should have done ages ago. The Chinese were saying they were going to stimulate local demand, and either they tried and failed or they just didn't bother. I'm not sure which is correct. But the Americans are saying we've had enough here, we're correcting the imbalances, and at the same time they're bringing cash back from the rest of the world. Companies like Apple, Starbucks, Google are reshoring money that is improving liquidity in the American banking sector at a time when they've ended QE. So that's actually brilliant timing from their perspective. We know there's a lot of manufacturing is reshoring back into small and medium-sized companies in the States. They're improving their capacity, they're bringing in new production with very little capital expenditure. You can see that with the jobs, the unemployment numbers are falling, so that looks really good. The American economy is going great guns. They are much bigger consumers from a commodity perspective than anyone else in the planet. I know China's been doing well, but the Americans are going to be strong consumers here. So I'm not worried about demand strength.
We speak regularly, of course, and we talk about mining companies and the mining sector. We're getting into the economics, but your response was very interesting, what you just said. Do you see there's more to come from the tariff wars that we've had? Do you see that the equalising the markets has yet to be achieved? And do you think there's more, as I say, downside to come, bearing in mind the tariffs we've already had?
Yeah, I do. I think there are a lot of tariffs in place, and also a lot of little tricks that companies pull to try and improve, or should we say increase the effectiveness of their tariffs. And so I think a lot of this is going to have to be broken down and equalized, and the rhetoric coming out of Trump will continue to look terrible. But I think this will go on for quite some time. But at the end of the day, I think we have coordinated global growth around the world, or maybe it's not coordinated, but it's happening. It's growth in Europe, China, the US, and most other parts of the world, and I just don't think that's stopping right now. The big cloud on the horizon is what happens if Europe breaks up, if Italy decides to go its own way, which it may well do, and then I think that could stall Europe. But again, Europe isn't the world's biggest driver these days. China and the States are much more important, and with the UK outside Europe, I think the UK will actually do well again. So it doesn't worry me too much. And at the same time, if we drill down into the mining companies, there's a lot of reason why those earnings are going to improve from here.
Which ones in particular, and ones that let's go back to the price of copper first of all before we take a look at some of the big mining companies, because I do want to illustrate this drop that we've had that you've spoken about. And in fact, at the worst point today, as of Wednesday the 4th of July, of course, is a holiday in the States, so a little bit of a thin market. We're at the lowest point since the 3rd of October 2017. But in fact, if you look at this in the longer term picture of copper, and I mean, we've been talking all the way through this bull market we've had here. Are you still buying at these levels, or would you buy at these levels, or do you think there's more downside to come before you're interested back in the price of copper in this particular instance?
Well, if you buy copper today, you're catching a falling knife, and that's not always a good thing. It's typical of the Chinese to short the market when the Americans are on holiday. We've seen that before, or when they're out having a big party, like at the LME dinner had many years ago. So yes, I think the price will rebound. I think it'll probably be quite a strong rebound as well, because it shouldn't be down here. There's a lot of reason why there's going to be strong demand for copper going forwards, and I'm sure there's some people ready to start buying the physical metal in this downturn, and it looks very artificial to me. And at the same time, I think the mining companies they'll probably hold back a bit of some of the sales and sell into the higher prices going forward.
How about some of the battery metals? Again, we've spoken about these before, the lithiums, the vanadiums and so forth, the cobalts. Are you still keen on those, or if I don't hear quite so much about them as we were 6 or 7 months ago?
Yeah, it's gone a little bit quiet, but I think, yes, the demand is definitely there. A lot of new giga factories being built at the moment, particularly in China, and they're going to need the lithium, they're going to need the nickel and the carbon, as in the graphite, to make those batteries with. And I think the supply chain is going to lag behind the demand for some years. It's possible in 5 or 10 years' time that there may be enough production out of Chile, but as Goldman Sachs said in a note that came out yesterday, they think there's going to be more problems in the supply chain than people anticipate, and I'm sure there will. I think ramping up in Chile isn't going to be as easy as they all think. It costs and it takes time, and you're in a hot, high altitude, difficult environment. So at the moment, Australia has taken over Chile. They're producing more from hard rock lithium sources, and I think we're going to see more of those smaller hard rock mines coming into the market in the next few years, certainly until other producers can start to dominate.
Yeah, we should bring up a chart of Glencore as well, in the news for all the wrong reasons. I mean, there's a subpoena they've got to appear in court. There's been this big drop in Glencore stock. In amongst some of the big miners, of course, Glencore has a trading arm as well as a big mining business. But what are you favouring at the moment? Any comment on Glencore particularly, or which miners are you favouring?
Well, so far, there are no allegations. There is a subpoena to collect information from Glencore, and of course, it's all about the DRC. This comes a day after Glencore resumed royalty payments to companies that may be associated with Dan Gertler in the DRC, and Dan Gertler may be associated with the president of the Congo. So there are certain inferences there. Glencore are a bit between a rock and a hard place. If the Department of Justice in the States goes after Glencore, then there could be a billion plus dollar fine in there, and it'll be a bit of a smacking for them. It's interesting the DOJ said they wanted to collect information on Venezuela and Nigeria, two countries where there's an awful lot of historic corruption, not to mention the DRC, but this is all about the DRC, and Glencore are going to have to somehow stop paying companies that may be associated with Dan Gertler in order to placate the Department of Justice. Of course, the Department of Justice may or may not decide to go ahead with proceedings, and I think Glencore are going to move very fast to head that off. So hopefully it becomes a non-issue for them, but I think it does set a bit of a warning marker out there, which is going to weigh on their price for a while.
Yeah, just quickly run through some of the numbers in the next couple of weeks. Sentiment, gold producer in Egypt, of course, Lonmin. We know all about the problems that Lonmin have had. Rio Tinto, BHP Billiton, Anglo American. What's your pick of the bunch there?
I think for me, Rio's and BHP, because the earnings from iron ore are very, very strong at the moment, and the technological innovation they've put into those huge mines in Australia continues to cut costs, continues to improve their margins. So billions of dollars of earnings, extraordinary earnings coming out of that area. I think for the smaller companies, yes, they're all working at making margin gains, but gold's not that exciting right now. I think a lot of UK funds want to hold gold because they see inflationary clouds on the horizon, and they know they need to own dollar earners, because if you're holding sterling companies, that's why they're underperforming. So they all know they need to get back into mining, but they're all slightly frightened of it as well. So this probably marks their opportunity to get in, and I think those funds will go for the safer, bigger companies, BHP, Rio Tinto. But at the same time, some of that money will wash into the second liners and the smaller juniors.
Yeah. Okay. All right, John. Thanks so much indeed for joining us. A wrap up of some of the news headlines around the mining sector today. They are just the production reports in a couple of weeks' time. Then, of course, the earnings follow on sharply behind. That's John Meyer, mining analyst and partner at SP Angel. Subscribe to IG for educational content, company insight, financial analysis, and expert commentary.